Welcome, everybody, to the Sunday night market strategy session. I am one of your hosts, Michael Saul, also known as Tiny, and Paul will be on in just a few minutes. We're going to start off by looking at upcoming earnings and economic reports for this week. Now, earnings-wise, there is nothing that stands out except ANAC, which is a stock that I pointed out in my video a few weeks ago when it was down here for a second. Hang on, I got to get my kids to stop screaming. All right, so that's the only thing I saw as far as earnings goes, but economic reports, we have the Eurogroup meetings on all day Monday. We have the JOLTS job openings Tuesday. Draghi is speaking at 4 a.m. on Wednesday, if you want to get up and listen to him. Thursday, we have core retail sales, and the weekly unemployment claims. Friday, we have PPI and preliminary University of Michigan consumer sentiment. So for those of you who are new, and we have a lot of new people here this week, I like to focus in on the red-rated reports, but orange, they can also move us. Yellow, very rarely do. Very rarely do we get any movement out of a yellow economic report, okay? So we got a lot of stuff coming towards the end of the week here that we want to watch for. As far as the market is concerned, Paul's going to go over everything, but we have started a pullback before we hit this 212.97 number, which I really thought we were going to hit before we pulled it back. I'm wrong so far. It doesn't mean that we can't go back up and tag that. So I don't think the high's in. Could this be the head of a head and shoulders pattern? Oh, you got to turn your mic off. Oh, a lot of feedback. Okay, so this could be the head of a head and shoulders pattern, but remains to be seen. We've got a long way to go until this forms a head and shoulders pattern. Okay? So without further ado, I'm going to hand it over to Paul since he wants to get on the mic. And he's in the wonderful state of confusion, otherwise known as Arizona. So he'll be going through his stuff, and then I will be back to answer all your questions. I will see you soon.
All right, dude, can you hear me? All right, dude, can you hear me?
Yes, pretty clear.
All right, so does anybody else hear the feedback, or is that just on my end?
Echo, then feedback.
What?
It's echo. It's not feedback.
Okay, so I'm gonna click. I'm on the phone. I won't be able to hear you, Tiny. You gotta text me.
Okay. Don't you have an app? It doesn't matter. I can't.
Okay. Let me just get. I'm just getting. People can see your screen. All right. So I just want to make sure. Do I sound okay? Because I don't hear anything anymore. I just see my screen. So do I sound okay now? All right, good. Excellent. No echo, now sound okay. Okay, so I just clicked off the phone. Tiny, if you need me, you got to text me because I have my Apple computer with me, and it conflicts with GoToWebinar for some reason. Do you guys see me too? No echoing, no. Oh, coughing. What happened? Is my webcam on too, anybody? No, good. Okay, so I can sit here without clothes on. All right. All right, so let's begin. Thanks for I cut Tiny short. No, Rob, I don't know how it when I log on to GoToWebinar from my Dell laptop at home, I have a button that shows you could show my webcam, and for some reason this one, no, it's so bizarre. I don't know. Okay, so this one doesn't. I'm going to go first because I'm in Arizona. I'm having, as much as I love winter and I love skiing, it's nice to get to a place where it was 85 and sunny for yesterday and today. And I got out and played golf yesterday and today with a client whom I'm having dinner with in an hour and a half. And I stayed at a resort. My wife, who hates winter, decided not to come. I begged her to come, and she didn't want to come, and it turns out it was a bad decision. So I'm enjoying Arizona. It's 85. It's sunny. It's beautiful. And that's it. So let's dive into it. Okay. Okay, here we go. So we left off last week. Let's start with some big picture stuff. We left off last week talking about, and I think I wrote on my blog too during the week, sentiment was at pretty dangerous levels in the market. Sentiment was at dangerous levels, but I thought the bull market was reasonably healthy. Nothing has changed today to alter that opinion. Well, let me close my Outlook so you guys don't get pinged with my emails. So sentiment, I have not seen any numbers over the weekend, so to be candid, I haven't looked at my computers until today. Sentiment, we came into last week, sentiment was at dangerous levels. It was arguing for some kind of single percentage point pullback. We're in the midst of a pullback right now. I think it's normal, it's healthy, and it's not the end of the bull market. So let me repeat. We're in the midst of a pullback. I think it's normal, it's healthy, and I don't think it's the end of the bull market. The pullback can manifest itself two ways. One, here's the S&P. One, we could have done all the price damage already, and we could spend another couple of weeks or more doing this, going sideways to build up some pessimism. That's one. That will take a little longer. Or two, we could continue the pullback deeper. Maybe we get down to, I don't know, 2050 on the S&P, 2000, hard to say, although I do think it's a single percentage pullback. And then from there, I think you'll load the boat again, and we'll go to down 19,000, and another pullback. And then we'll pull back from there, and maybe it's deeper, but we go to 20,000. So nothing has really changed. Friday's employment report, all the fretting and freaking out was because we created the report was a little warmer than expected, meaning the likelihood of the Fed raising rates went up a little bit. So bonds got taken to the woodshed, and then eventually stocks did. I think it's total and utter non. So as long as you guys have been here, I've been a bull, nothing has changed. Now we're going to fret that the Fed may raise rates from 25 bips to 50 bips, or God forbid 100 bips. I think it's utter nonsense. The reason why I'm less what's the word? I have less confidence in the Fed raising rates is because given how the strong dollar is a quasi-interest rate hike, and if they start to raise rates, I think that further adds fuel to the dollar's fire, which will have negative long-term ramifications to the global economy. Not so much ours, but the global economy. So I think the Fed would be dumb, which they've been done before, to raise rates. So let's dive into the indices and see where we end up, see where we stand. Here, they all, frankly, they all look very similar. So here's the Dow. It is very, very, very unusual to see a tall green candle as a peak of significance. Go back all you want. You won't find many tall green candles as peaks of significance. And if you go back to the real declines, you won't find any. So what's up with the Dow? We're pulling back. Yeah, there's a whole bunch of moving averages below, as you'd expect. There's the 50, there's the 89-day EMA, there's the 150, 200. Exactly, they're in perfect nesting order, shortest to longest, which is very healthy. Stochastics has got a long way to go to get fully oversold. Again, we're looking at either some more weakness in the coming weeks, or we're going to go sideways and then blast off again, in my opinion. I totally dismissed the bears argument, which I really love doing. If you watched, the financial networks, the financial pornography on Friday was at, I don't want to say record level, but it was at a dizzying pace. Everybody on was a bear Friday. Like, somehow because we created 300,000 jobs, we're having a bear market tomorrow. Somehow there's a recession coming. To me, it's complete nonsense. Dow probably should pull back further. Maybe Monday is a pause day. Maybe Tuesday's a pause day. But this should not be the absolute low either. We should have a little bit more downside left, either a little bit more or a lot of bit more. But then I think we're going back to all-time highs again. S&P, guess what? Looks exactly the same as the Dow. Nothing different. Guess what? Mid-caps look a little stronger. But you know what? Same thing. There's nothing. Moving averages in the same spot. Stochastics. Small caps, guess what? Similar spot. Maybe they're a little bit from a price construction. They're already pulling back to the peak, so what? Support is between here and all the way down to the 2015 lows. So you get a pretty good body of support. So support's not a point on a chart. It's more of a pillow top mattress. You could sink into it and then be pushed off of it. So support is anywhere in the next 7 points on the IW Marys. And want to bet something else? Here are the cues. A little stronger, but they all look the same, folks. The pullback has to be bought. Is it done? Probably not. Will there be time to buy? Yeah, but the pullback should be bought. Here's Europe. So last week I said I would take a shot with Europe sooner than later because it looks like, to me anyway, bouncing against the 200-day moving average is a pause, not an end of a rally. We've pulled back deeper than I probably would have thought, so I'm looking for some kind of oversold condition in stochastics with a candlestick reversal. But I think you're getting to the point where VGK Europe can be bought for a trade. Emerging markets had 2 bad days this week. Do I think the rally's over here? I don't. I think this is a stopping point, and I think we're going to go higher in emerging markets. The problem with emerging markets is what? What's the problem? The single problem with emerging markets. Let's see if somebody's really doing their homework. Don't everybody answer at once. Yes. Nantita. The strong dollar. Naveen, William, yes, the strong dollar. But why is the strong dollar a problem? Who cares if the emerging markets have see a strong dollar? What is so worrisome about a strong dollar in the EM space? Single most worrisome thing about a strong dollar. Nope, 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 nope. Guys, great answers. You know, they can't sell their stuff, commodities, export, money flows. You're all right. But the single most worrisome thing for the emerging market countries about a strong dollar, and you're all right, but the big one is their debt is priced in dollars. So that makes servicing their debt more expensive. But you're right. Exports are tougher, deflation, carry trade, all that stuff is correct. So the strong dollar ain't so hot for emerging markets. Let's go on to the three key sectors. The banks, banks traded, it's funny. Last week we left off and I said the banks are neutral. The banks were neutral, and they're neutral. I like this pattern here. It's almost a flat top. Look at Friday's action. That's a real, let's look at the ETF. Okay. They ran this thing right up, got everybody stopped into the trade, and then they closed the lows. Not exactly overwhelmingly bullish, but the prospect for higher interest rates is bullish for the banks because their net interest margins increase. The banks can put can add margin to loaning money. It's better for the banks if rates go up a little bit. The banks, I'm still not bullish on them, but they don't look as neutral as it did last week. We'll see how they trade this week. The transports had a crummy day on Friday, as did everybody else. It's funny. I read two prominent technicians whom I respect a lot. And in their last Monday's report, one downgraded the transports from buy to sell, and one upgraded it from sell to buy. My opinion is I'm in the middle. I remain neutral. I'm a trannies, but I do believe ultimately this whole sloppy top period is going to result in an upside resolution. So this is a very sloppy topping pattern, and if I was more negative in the market, I would be worried here. This ain't good. But I do believe, because I'm positive in the market, this is going to resolve itself from some lower level to the upside. And once it gets to the old peak, it's going to take off like a rocket. So I'll rate that neutral. And finally, our old friend, the semis. Semis hung in there pretty well last week. I still own a third or a quarter size position in the semis. I didn't do anything with it. I think they probably trade a little bit lower. I don't like this here. It's not a sign of real strength when you blast off and then you give it almost all back the next day. But they're still trading fairly well, and if they don't break down significantly, the semis probably have another run. I do think, as I mentioned in my fearless forecast, that I think the semis are going back to their all-time highs from year 2000. So they're okay. So our three key sectors, the takeaway is this. You got two neutral and one modestly positive. It's not what you typically see if stocks are about to go into a bear market or have a major decline. Okay? It's not. And the major indices, they're not in bad shape. They're also not in the kind of shape where you would forecast a major decline. Let's go to the other sectors and then take a break and answer questions. Here's software. How does it look? Looks like everything else. Looks like it has some more work to do on the downside, but it doesn't appear that the top is in. Telecom got thumped on Friday because AT&T got thrown out of the Dow. I I'm working on a blog post for early next week, recapping all the Dow stocks thrown out and all the Dow stocks added. You will find overall that when a stock is added to the Dow, you should short that stock, and the stock that gets thrown out, you should buy. So AT&T is pretty soon a buy, and Apple is going to be a sell. And that's just because Dow is typically so late to the party. Let's see what else we did. Diversified financials, not as strong on Friday as the banks, which makes sense. I don't like this candle at all. It's a bearish engulfing, and they ran all the stops in. So this candle kind of worries me. Best you could be is neutral on the diversified financials. Consumers, which has really carried the rally, this chart, nobody you can't find fault with the consumer right now. Maybe got a little divergence, not one that I freak out about. Still looks good. You get a pullback to anywhere near 73 on XLY, you could buy with both hands. Look for a candlestick reversal and attack. XRT retailers, not as strong, but still pretty good. They didn't get hit too hard on Friday. Here's your leadership, folks. They came back from the dead after 2014. Home builders, one of my favorite sectors in my fearless forecast. Pulling back really nicely. They are a buy into any oversold and candlestick reversal. I think they got higher highs coming in the home builders. Industrials, I've been dead neutral on for a while. I don't have great feel conviction these at all. I think they trade like the market. They're kind of boring. They're not leading. I don't really have an interest. Materials, same thing. I didn't like them to begin the year because we're in the 6th year of the bull market, and they typically don't lead this late in the bull market. So I don't really have a lot of conviction in basic materials either. XLE, one of the energy plays, they got hit pretty good the last 2 days, much to my disappointment. So they got further to go on the downside. I added to my position in OIH on Monday and Wednesday. And of course, we went down pretty good on Friday, so I'm not happy about it. But I'm gonna give this a little room before I pull the ripcord out. I do think there is a large rally coming in OIH. Whether it's already started or we're going to see new lows first, I don't know yet. I had felt pretty good early in the week that we were going to take out the old highs within a week or two. Friday's action is not good. Bulls got to step up in OIH pretty quickly. Let's see. Large cap pharma, I mean, still looks fine. No issues. A little divergence here, but they look fine. Almost nobody trades them. XLV, healthcare, which you know is a long of mine. It's still a long of mine. I didn't like Friday's action at all. You're pulling right back to the breakout level. I do like flat top breakouts like this. They're not supposed, so if the bulls remain in control, the decline should not be below these lows here. The bulls need to put up a stand pretty quickly to remain kind of in charge in XLV, which is healthcare, and biotech, which I think you know I have a big position. This is my biggest sector position by far. I think it's like, I don't know, 40% of the sector portfolio. It's a big holding of mine. I love this action. Love this little flat top here, little coil, as Tiny would say. Love this breakout. Boom. I'm all excited. I'm doing a little dance. Friday's action, disappointing, but not deadly yet. So still liking biotech. I'd like to see it trade sideways and not have a huge decline here. A little more defensive. REITs, absolutely falling apart. as you'll see, as utilities are as well. Thank God I sold them a couple weeks ago. But anything interest rate related got hit pretty good because on the prospect of the Fed raising rates. As stupid, as imbecilic as that sounds, they're going to raise rates from 0.25% to maybe 1% over half a year, and all of a sudden people don't want rates. It doesn't make any sense. Here's utilities. They got hit with the ugly stick pretty good. I am ecstatic that I bit the bullet and sold them out right here. Although at the time, I was not happy selling down here, let me tell you, right in the right side bar. But now, I feel like I'm really smart. Utilities, and finally, staples. I haven't had a lot of conviction in staples. They're expensive. They're not leading. They're kind of blah. So no reason to run out and buy staples. Let me pause for a second. Mushroom, everything's a daily chart. Yes. Is there a good article on how to do weekly review? I mean, Mushroom, you can do the same weekly review that I'm doing here, but do weekly or monthly charts. Adine asked, what technicians do you read? I read Carter Worth from Stern Agee. He's become a friend would be an exaggeration. I'll say acquaintance. And I read the guys at Oppenheimer. I think they do a pretty good job. Carter's been negative for a long while, and the guys at Oppenheimer have been positive for a long while. But I like reading them anyway. No attitude, no ego. Gavin, is Dow 20,000 your upside target? Oh my gosh, yes. So I think the Dow's going to 20,000 before the next bear market. Gosh, yes. I think the bear market. I think the earliest. Wow. Now I'm going to really open myself up to criticism. I think the earliest a bear market can begin would be, Q3, Q4. But I mean, depending on how these declines shake out, this bull market still looks pretty healthy. All right, let's go on. I didn't cover my emerging market. So FYI, if those you care, I still own India. Here it is. Had a crummy day on Friday, but I still own India. And I still own China, which killed me last week. Hate this. I mean, this is just I hate sitting through this decline. But it's still the number 2 emerging market in my hit parade, so I own it. And I'm going to suck it up until it falls off. And then Philippines have been a really good trade. And even with Friday's decline, it's still a good trade. I'm anticipating the Philippines going sideways for a while, so maybe a little bit lower, and then launching another run to new highs. Q3, Gavin, the earliest I could see a bear market starting would be like September of this year. But I'm not projecting that a bear market begins in September. I'm just saying all the pieces have to come together pretty quickly, which we'll see. I'm a bull. Short-term pullback scenario, longer-term bull. All right, let's go. Well, let me go pull up the AD line. This is such a great resort. There's 2 resorts in Arizona. Oh, there's a lot more too that I like, but the Westin Kierland, such a great place, and I really like the JW Marriott Desert Ridge. So if you're looking for a place to go with your significant other or your spouse or your kids, they're 2 great. I'm not comfortable in the 5-star resorts. They're a little too stuffy and snotty and quiet for me, but I do like the really good 4-star ones, the Westin, the Hyatt, and the JW Marriott. All right, so let's go and look at, maybe you don't even care. Let's go look at the AD line. So there's the AD line. Guess what? There's no divergence at the top. The Dow made an all-time high, and the AD line made an all-time high at the peak. Bear markets almost never begin with an AD line this strong. Could it? Anything's possible. Not for my money. So watch, I'm setting myself up now. Watch, the bear market began, and I'm going to get crushed. I don't think so, but that's the AD line. Still looks pretty good. Oops. While we're here, let's look at high-yield bonds, which I have an enormous position in. Here's JNK. So I sold JNK last week. I think it was Thursday. I no longer own JNK. I do not own JNK. So we had a really nice run. This is one of the easiest trades I ever had because we ran it up from somewhere in here, and we sold a little off the peak. So that was good. I don't own JNK. Am I worried about it? No, I'm not worried. It was a good run. It began to roll over. I got out. My high-yield mutual funds I still own. Let's look at PHYDX, the PIMCO High Yield Fund. It's a multi-billion-dollar junk bond fund. Bought it in here around 9. Now we're up here, up 3%, whatever it is. For me, it's fine because it's in a very, very conservative portfolio. I think we're getting close to the end of this trade. The good news is that high yield had a phenomenal rally, so the canary in that coal mine wasn't dying. Bad news is the rally may be over, so we'll have to see how it trades the next couple of weeks. Let me just look at questions for a second. None. Good. Either you're asleep, you don't care, or you understand what I'm saying. Let's go to the dollar. Boom. So nobody should be caught flat-footed here. I talked about this for the last couple of weeks. I said I love the fact that smart money was locked and loaded short the dollar, and the only decline they could get was this sideways consolidation. That is so bullish. And then, boom, there's your first clue, tall green candle, just below the highs. And then this week, boom, dollar breaks out with authority. So nobody should have gotten caught either short the dollar or long the euro. All right? We are really overbought again. Let's see how the dollar reacts to being this overbought again. FXE, the euro, we talked about it last week. I said it's hard to love this when the bulls have been locked and loaded long, the smart money up here, and they just cannot get any rally started in the euro. Yen, you know my theory hasn't changed. It's going down 50%. I think this big consolidation is going to lead to a big move to the downside. Okay. Let's see. Treasury bonds. We must have done. What the frick? Did we do a roll? We rolled so. I can't hear a tiny answer, so maybe this must have been a roll in the Treasury bond, so it screwed up the chart. Okay, so we're not going to look at this. We're going to look at TLT, which, at least for a couple of days, I got stopped out yet again. I don't have a position. I think I got stopped out Wednesday here. And so for a couple of days, I'm a winner. I hate getting stopped out like this because we made so much money. We owned this almost all of last year. And January was a great month for this for me. February obviously was not, and March is nothing. So I have no position in TLT anymore. It does not look like it wants to rally of significantly anytime soon. Here's the yield chart, which is the opposite of TLT. Big breakout in yields. You'd have to think this has got pretty good support right now. And on the 10-year, my range was 150 to 230. We're right bumping almost at the top end of my range on the year. But this is a yield chart. It still looks like Treasury bond yields are going higher. Jay asked about MLPs. Good question, Jay. I own this ETF. So let's go to the other chart because this is a big dividend yield. It doesn't get picked up. No, it's not MLP. It's AMJ. So Jay, to answer your question, here's AMJ with the dividends factored in. It's definitely not as weak as in the short term REITs and bonds. It's weak. It was weak because of the oil collapse. This is AMJ, or the MLP sector, has withstood a lot of negative news between interest rates and oil. And the fact that it's holding above the lows, I think, is pretty encouraging. But I'm long it, so I have an unfortunate bias to the long side right now. Do I think it's in jeopardy? I think it's trading fairly well now. I think I'm going to give it some room. Okay. So we did bonds, we did stocks, we did currencies. Let's bang out some commodities like crude oil. Not much happening, folks. Really big consolidation. I don't like this right now. It's going on too long. Originally, I thought this 3-day rally was consolidating and it was going to bust out to the upside, and it still may, but the longer this goes without breaking out, the more likely it's going to go down to new lows. So we got to keep an eye on crude oil. I mean, look at the commodity here. This is the commodity ETF. Not exactly a picture of bullishness. Doesn't look awful yet, but if we begin to roll over another day or two, it's going to look like it's going to scream into the mid-teens. Let's see. Let's go to gold. Why did gold get pummeled on Friday? Gold got pummeled on Friday because the dollar was so strong. That is one, and I've said it for many weeks, gold targets to sub 1100. Gold targets to sub 1100, period. I talked about it the last couple of weeks that I think we probably go below this low. Is it right now? I don't know, but there's a lot of momentum right here. And gold rarely ever sees bottoms on tall red candles. So you'd have to believe that gold still has more downside to go. Silver. Okay. Silver, you can't get in love with it either. It trades, sloppy. Would not want to be long. I'd probably look to be short some silver on any kind of bounce from here. Okay, dinner got pushed back half an hour. Good, I don't have to rush. Let's cover copper, which I have been saying. I do, of all the metals, I probably like copper the best. Like most of the other currencies and metals, the smart money has been locked and loaded on the long side. This is the one area where they've been right. We talked about this bottom as it was forming. You have to still like copper a little bit. Friday's was an ugly candle, but not deadly yet. I think you got to copper, maybe a little more downside in copper, and then hopefully it stabilizes and tries to bounce back above the high from February. Natty gas, before somebody asks. The smart money still likes it. It's looking a little more constructive than it did, say, here. Looking a little more constructive. It looks like we're seeing some kind of rounding of the bottom, maybe a sloppy head and shoulders bottom, but it looks a little better than it did a couple of weeks ago, natural gas. Yes, Melissa. The question was on gold. Was that the tall red candle that I hate? Yes, it was. I hate red candles. If you're a bull, if you're a bear, they're awesome. Let's see. What time is it? Oh, we're good on time. We'll quickly go through. Here's wheat. nothing redeeming about wheat. Maybe he tries to bottom this week, but I wouldn't stick my neck out on the long side on wheat. Corn, doing nothing, frustrating both the bulls and the bears. I have no conviction whatsoever. Beans, same thing. We get nothing going on. I really thought, back here, I thought we were rounding out a bottom, and this was going to consolidate and then bust out to the upside. And not what's happening? Absolutely nothing. It's just frustrating both the bulls and the bears, so why bother? See anything going on? Cocoa, into resistance. You got a reversal candle in place. Nothing for me in cocoa. Coffee, nothing. We talked about it last week looking awful. I think this bounce is shortable, and for lower lows in coffee, nothing really redeeming on the long side. Cotton, nothing. And sugar. Yikes, ugly. So somebody tell me why a bunch of these non-metal and non-energy commodities look redeemed. Why? What's the hint that wheat and cocoa and all those commodities may be turning over the intermediate term? Why do I say that? It has nothing to do with candlesticks. Anybody know? Nobody knows? It's because the dollar has been dynamite strong. Okay? Nope, not a dollar pullback, William. The dollar has been dynamite strong. So therefore, all the commodities should be like death. But a lot of the commodities are hanging in, going sideways in the face of a really strong dollar. So that there's some underlying bullish tone there. Subtle, but it's there. And that's not a short-term play. That's more intermediate to long-term. That maybe you're seeing the first sign of a agricultural, I think DBA. No, it is ags, but I don't like that ETF then. So any questions, comments, concerns? DBC. DBC looks like GSG, which I trade more. They both look the same dreck, garbage. I don't want to, personally, I don't want to touch these yet, Sam. I want to wait, let them shake out. I'd rather pay a higher price with lower risk than a lower price with more risk, if that makes sense. I'd rather stay at the Western Carolyn for a long time if somebody wanted to fund me. Would cautiously start getting long. Ag commodities, I probably would. I wouldn't rush. Let's put it that way, Nandita. I would just sit and watch for a while. If there's a real move coming, the move's going to be big. So I wouldn't do anything. Jay, on the euro, I said same thing from last week. It looks like crap. It couldn't rally in the face of all that smart money long being in. It collapsed this week again. In my forecast for 15, I called the euro to go to parity. That's a long-term forecast from like 150. So I think we're going to get there. So my bigger concern is on the euro that it is unraveling at such a pace where risk is increasing dramatically, volatility is really increasing, and in the euro, I'm not forecast, so nobody say in a couple of weeks, well, you said, but what I'm saying here in the euro, let me pull up a long-term chart. All right, here's the monthly chart of the euro. Okay, this is so ugly what's going on now from 137 to now. I can certainly make a case where after a bounce, the euro absolutely crashes. I mean, like they literally throw the towel in mass, all that smart money, and all of a sudden the euro's at 90. So risk is really increasing on both sides, as is vol. But I can see a scenario down the road where the euro just absolutely implodes. Do I think we get a bounce tomorrow? No, it's Monday. If you're a bull, I'd like to see a lower opening, some mid-morning firming, and then an afternoon rally. That's what I want to see as a bull. Right now, we're down modestly. Tiny will tell you, I don't want to steal his thunder, but the model for tomorrow is digestion all morning, a quiet morning with some trading both ways. Pretty amazing that Dow is down 300 points and the trend was 82. That is not, there's no sign of panic or a washout. Not so great on that. Young Lee, Europe markets going higher. I think if you look out more than a couple of days or a couple of weeks, they should. In the short term, it's a little dicey right now. Other questions, comments, concerns? Nobody? So you have the marching orders. So to me, early this week is not the time to go take on a ton of risk and try to play either side. Be smart. There'll be plenty of time to get long at the appropriate time and maybe down the road to get short. I just don't think it's here. In the meantime, I am going to enjoy my last day I'm going to LA tomorrow. I think I have a noon flight. As I hang up, I'm going to go try to change it and fly out later now because it's so nice here. And then I'm in LA Monday, Tuesday, Wednesday, fly back early Thursday morning, and then back to Vermont Friday. So let's see. So going forward, I think this week markets are either going to, we'll see what happens tomorrow. I think tomorrow and Tuesday are key days. But this pullback should either move sideways for a while or we should have more immediate, maybe a bounce for a day or two and then have one more sell-off and then we wrap up the decline. Too hard to say today, but I wouldn't run to buy the opening tomorrow. Tiny, text me when I can't hear you, so text me when you're ready to come on so that I can shut up and give you back the floor. Any other questions, comments, concerns? If you're in Arizona and want to have a drink with me tonight, let me know. Other than that, I think Tiny's back on. He didn't text me, but I see he took over the screen like the selfish person that he is. So everybody have a great week. Stay out of trouble. Tiny, back to you.
Okay. Thanks, Paul. Now, give me your stocks. I'll go over them. If you also have futures, currencies, commodities, whatever else you need, I'll go over them. So go ahead. I'm not going to play any music in the meantime because I'm just going to wait till I get a bunch of stocks, tell you guys to stop, and then I will go through them and then ask for more. I'm going to ask for more. Oh, we do have a poll today, though. Let's put the poll up. There's a poll for everybody. And by the way, it's anonymous. It's anonymous, so don't worry. Nobody's getting insulted. We're just trying to get a feel for what you like better. No, it's okay. You could vote. Maybe I should have maybe I should have done that. Maybe I should have put a third option as both. But in the meantime, don't worry. I can't see who you're voting for. So it's not, don't worry about it. Nobody's going to get in trouble or any of that crap. What are we going to do? What are we going to do? Not let you come anymore? Come on. Would I do that? Hey, I like Paul. I think he's great. So, I mean, I could do what he does, talk about the market and stuff like that, but it's going to be just a shallow layer compared to what he does. He goes pretty deep. So it's pretty awesome, to hear him talk, so and he really has a good feel for a lot of things that I don't look at. I mean, I've learned a lot from him looking at stuff. I would have to use a big reference sheet to do what he does. He just does it off the top of his head. So, and believe me, it's not right now. It's pretty. It's like 60-40 Paul. So obviously, it's not. It's not like, oh my goodness, I'm gonna jump out the window. I'm not gonna get. Not gonna get upset either way. So it doesn't matter. We just want to know what you guys and gals would rather hear more of. Yeah, it's right around 60-40. So I'm trying to get some guests on, believe it or not, some guest lecturers on. We're trying to do that too. Really trying to blow this thing up. We're not getting that many people here. We're only getting, I mean, we get a lot of people registered, but we only get about 65, 70 people. It's weird. We get, easily over 100 and registered, and we're only getting like 65, 70 people showing up. And then a couple hundred more watch the replay. So weird. I mean, maybe, Jan, that could be true. Maybe it's because it's over dinner and stuff like that. But, yeah, I don't know. It's real strange, though. Anyway, all right. So I'm closing the poll. Only 61% of you 63 to 37, Paul over me, 62% voted. So that's not, it's okay. Just probably means I got to get a little better, and I'm gonna. That's what I want to do. I want to go over the market a little bit. And again, I mean, I don't do a lot of the, I go over mostly the questions. No, it's okay. I'm not offended or anything. Some people, it's different people for everybody. Okay, so Adobe is in a bull flag, by the way. This is the stock I'm looking at this week. This means absolutely nothing, of course, as you know, unless we get confirmation, or at least you should know. All right, this is just a piece of artwork without the breakout above the this pattern. Okay, so it's not like, oh, Adobe should go up and then tomorrow it tanks 20 points. All right, I mean, that would suck. 20 points would be all the way down here. But what I'm saying is, patterns are just beautiful artwork. They're just beautiful pieces of artwork until they get confirmed. All right, and this is a pretty nice looking bull flag, though, for Adobe. So if the market does go higher, I would be watching Adobe for for an entry here for a long side trade, at least up to the highs, if not higher. Okay, this stock does have the makings on a technical basis. All right, I don't go into the fundamentals and stuff, but it does have the technical momentum behind it to be $100 stock. I don't know when that's going to be, right? I don't think it's going to be out of this pattern here. It goes straight to 100. That would be a pretty big move, but it does look pretty technically, technically it looks really nice. All right, but of course, wait for confirmation. All right, so no more stocks. Let me go through them, and then I'll ask for more. Okay, VIP. Yeah, still okay. I mean, we talked about this a couple of weeks ago. Mike Swanson had recognized it over here. It's still looking okay. I think it's going to get to the 200-day, but if you notice, it smashed right into that resistance point that I talked about last week, which is where this break happened. Okay, the break point, this is where we broke down. That's going to be resistance on the test back up, just like on a break out to the upside. The test, like here, this is a great example of that over here. You see where we broke out of, we came back, tagged it, and then went higher. So at resistance right now for VIP, if we get above last week's highs, the 200-day moving average would be next. But so far, so good. I mean, it's looking okay here. VLO, yeah, at the 20 EMA, it's got to rotate from here. If it breaks down, then you got a gap fill here in the 56s. Yelp, okay, it doesn't look too good. Looks like it wants to go lower. Let's see, RSX. Yeah, I mean, it's holding the 20 EMA. The bull's got to come in here. This is the Russian market vector. It's got to come in here. I mean, I don't think this is really a cup and handle. It doesn't look like a cup and handle. We got to see if if the bulls can come in here. Airline stocks, I mean, Love, it's holding the 50-day moving average here. Right, what do you got? ALK, Alaska Air, holding the 50-day moving average. So I think oil's going lower. That's my opinion. But, of course, I'm going to wait for it to break down. I'm not going to guess. Right now it's in a consolidation. Paul talked about that. And it's at a pointed, it's coming to a head here. So if we break down from here, I think oil's going to go to new lows on the year. Now, of course, if it could come back up and break out, yeah, then you got 55, and then you got this 60 level here to watch on oil. So, if oil goes down, airline stocks should benefit from it. Okay, SDRL looks lower to me. Stock looks lower. ADSK, Autodesk, you got the 20 EMA right now so far as holding. Got to pull back from highs here. But again, you got to wait for confirmation from this. Got to wait for confirmation. But it looks okay in the meantime. MGA, watch the 20 EMA, see if it holds as potential support. CRM, watch the 20 EMA. I mean, this was a gap, and so far it's pulled back from that gap. But watch the 20 EMA. That holds, and I mean, even if it doesn't hold, you got the gap. That'll be next for support. But you got to watch this because could get a bounce from here. Could get a little power bounce from here. Netflix. Yeah, I mean, Netflix right here is back into this small consolidation here. If it keeps going, you got to watch the bottom down here to see if that'll hold. But Netflix is, was obviously very overbought up here. I mean, look at this move. So a rest is definitely not surprising. WLL, yeah, I mean, it's consolidating here. So what you want to do, again, these narrow range candles suggest that we're going to get a move very soon. It's right on the 50-day moving average. Which way is it going to go? Wait for it to break. And, of course, the break is just the first part, right? You got to make sure it sticks. Okay, McDonald's. Yeah, 20 EMA. Watch the 20 EMA, see if it holds. But, again, this was a nice push-up. Gets overheated quickly, then it comes down to this 20-day moving average, see if it holds. CLR looks like a make or break at the 50-day. If it breaks down below here, you got this next target down here in the 37 area. Merck, M-E-R-C. Yeah, it doesn't look too bad, this Mercer International. I don't know what they do, but it doesn't look too bad. It looks like it's consolidating up here. Had a decent day Friday despite the market getting cracked. See if it could, what it does if it gets up to here, which looks like a probe pattern, so it looks like it will get up to that. But what will it do after that? Kraft, yeah, selling off here. Yeah, not so great. If it takes out this last low, then you watch the 200-day moving average. EWZ, I mean, I'm not looking to bottom pick this. Looks like Brazil's getting smacked here a little bit. IDT, again, broke down below the 50-day moving average here. Has had a nice run up. I mean, could it be, could this be this little 2B top here? And now it's, I mean, 20 is probably going to be a big number on IDT. See what it does there. LNG, pull back to the 20 EMA. It's looking good on the short term. You got a short-term channel here. See if it gets some rotation out of this. State Street Corp. Whoops. State Street Corp. Yeah, sloppy. Give it a little bit. See what it'll do from there. Rig looks lower. The rig looks lower to me. Looks like it's starting. It's going to come out of this consolidation to the downside. Coca-Cola, it's too sloppy for me. It's too sloppy for me to get a feel. Tesla, not bad looking, as if, if you're looking to, looking at it from a consolidation point. Sorry, I couldn't get my thoughts there for a second. But on the short term, it looks like it wants to go down and test this low. If it breaks it, then it could be in trouble. But overall, it's not looking horrendous here. I mean, I know it's under the moving averages and all that, but overall, it's been holding this range for the last couple of months, whatever it is, 4 months here. Okay. Wynn Resorts. Yeah, it looks lower. Let's look at Las Vegas Sands. I mean, Las Vegas Sands is actually lagging the downside move. So Las Vegas Sands may be a value play on the short side because you got Wynn already near the lows and Las Vegas Sands and, just kind of breaking this trend line here. Okay. ISRG. Yeah, I mean, it's holding this low for now, but if it gives way, could be a quick trip down to the 200-day, but just look at all this consolidation over here. All right, that's going to come in as potential support. By the way, did Kentucky finish undefeated? They didn't have a game today, did they? Kentucky finished. They must have got the first seed today, right? Any more stocks? Go ahead. Yeah, I assume they got the number one seed. I mean, even if they lost, they would have got it. It's pretty crazy. March Madness is upon us, folks. Whoa. Yeah. Yeah, but they're too young to learn now. I'm trying to teach them karate now, believe it or not. MMA. There's a great MMA place by me. So I'm trying to get them from a UFC fighter. Actually has a round. So. All right. All right. No more. No more stocks. Let's go over what I got. XLE. Yeah, I mean, I think oil's going lower, so I think XLE just broke down below its 50-day. I think that's going to go lower as well. WBA, nice looking stock. Walgreen Boots Alliance, nice looking stock here. Let it consolidate a little. It's a bit overbought, but looks like it wants to go higher. ABBV, if it loses this low here, should be a quick trip down to this low, the 52 range, the low 52 range. Here's Guild. Wow, this thing just continues to stay in a consolidation here. Got to wait and see. This, you got to get a momentum push out of this, okay, before you can make a pick. Starbucks looks great, but it's overbought. I mean, I think it's going to 100, but is it going to pull back first? I mean, it's overbought. We want to see if the buyers come in here or not. IWM is the Russell. I mean, we went over the major indexes already. It's pulling back like the rest of the majors. It looks like it's going to go higher. GDX. Yeah, I mean, this is the gold miners. I mean, this got murdered on Friday, and this could be a breakaway gap to the downside, which means these lows are coming up. That's a nasty, nasty move. ATI, spinning top at the 50-day moving average. See if it can rotate off of that. LL, yeah, I mean, lumber liquidators. It is at support right here. Okay, so I'm expecting a bounce, but that bounce should lead to lower prices. Okay. VIPS, did I do it already? No. VIPS looks okay. I mean, it's consolidating at the highs here. See if it can go higher. Apple is in a bull flag. Looks like Adobe. It's in a bull flag. It's all it is artwork till it gets some buying to get it up over that. BSX, yeah, it looks like it's pulling back. Watch the 20 EMA if it can get to there. Caterpillar here could double bottom down here, but if it breaks below this, look for this to tag 75. Thanks everybody for joining me tonight, and I will send out the replay shortly. I'm going to process it now. Have a great week. It's going to be a good one. I think we're going to have a really cool week. All right, you got the bonds ready to go. You got a lot of things going on here, and gold and oil and the S&P and the market pulling back. Let's see what happens. Talk to everybody next Sunday.